You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group and co-hosts Uncle Mike Tusaw from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster, Joe Benazzi from OptionPit.com, and Henry the Flowmaster Schwartz from SIBO. The Option Block is brought to you by SIBO. SIBO's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.sibo.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back once again. It is time for the bi-weekly options extravaganza known as the Option Block. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which all of you folks are binging. Hope you had a good weekend. Hopefully it was much better than mine. I won't go into detail, but let's just say it was a memorable weekend for mostly the wrong reasons. A whirlwind 72 hours since I turned off the mic on Friday over there. But nonetheless, managed to sneak one interesting thing in there. So we'll get to that maybe. But first, let me introduce our cohorts, my partners in crime, the uncleest of Mikes, Mr. Uncle Mike Tusaw from St. Charles Wealth Management, as well as by the rockingest of lobsters, Mr. Andrew Giovinazzi from OptionPit.com. Also remember, if you want to check out all the fun stuff like pro Q&As, oddities, we're going to give away the Pro Trading Crate today, but unfortunately other things intervened, so we'll have to do it probably later this week. So stay tuned for the winner of that. If you have your name in the hat on the Pro, you are automatically entered. Join up now if you haven't, so you can get in for the February Pro Trading Crate. Where do you go to do all that? TheOptionsInsider.com/pro is the place to go as we go on into our 80s Trivia Challenge. Here we go. All right. So like I said, it was not a great weekend by any stretch of the imagination, listeners. But one thing that was good, again, packed a lot into 72 hours, most of it not good. But one thing that was interesting and good was we did take a sojourn down to Indianapolis for the Royal Rumble. Enormous, ridiculously enormous. 67,000 people. I mean, it was bigger than WrestleMania in terms of crowd, just enormous. So quite the event. And it got me thinking. I also saw while I was down there, I was in the same room, Uncle Mike would have lost his mind with a bunch of legendary 80s wrestlers, which was pretty cool. So I know I've tried to shy away from 80s wrestling in the trip because it's just demonstrably unfair to the Rock Lobster. He doesn't know 80s wrestling. That said, we will do one this week. And it will be Royal Rumble themed. And to try to mitigate the blatant unfairness, we won't be a buzz. Rock Lobster gets to go first. Mr. Rock Lobster, I will let you guess. The Royal Rumble is an institution hearkening back to the halcyon days of wrestling in the 80s. The best days ever for pro wrestling, of course. We all know this. This is a well-established bona fide fact at this point. Mr. Rock Lobster, take a guess. What year in the 80s did the Royal Rumble commence? What was the first year, sir?
1982.
An interesting guess. Not bad, not correct, but not wrong. Tell you what, I'll give you a half-point bonus just because, again, 80s wrestling, demonstrably unfair to you.
I don't want to, listen, I can't handle Tucson complaining about the half point. It's just, I'm sure that everybody knows when the round table of wrestling, whatever the heck it's called, started in the 80s.
The round table
common knowledge.
The round table of wrestling. I'll give you this, Mr. Rock Lobster. Name one of your favorite 80s wrestlers, and if they have appeared in the Royal Rumble, you get a half a point.
Oh, come on.
Go for it. Go for it, sir.
Give him a point, then.
No, a half a point. He didn't get the full question.
Hulk Hogan.
There you go.
Oh,
he did.
Wow. He really earned that one.
He won 2 Royal Rumbles. So there you go. Hulk, you get half a point for Hulk Hogan. It's the only way to be fair because anything 80s wrestling is demonstrably unfair. To have a point to Andrew. Now, Mr. Uncle Mike.
Again, the only 2 people on the planet that care about 80s wrestling happen to be in this particular show.
All right,
That's all I'm going to say.
I beg to differ with you on that one.
Mr. Uncle Mike, you can now redeem yourself. What year did the Royal Rumble commence, sir?
This is actually kind of hard, and the temptation of Googling this did come to my mind, but I did not. This is an honest answer because I don't know. I'm going to go with, I think it's 1989, but I don't know.
You know, it's funny. When I looked up this trail, I thought 89 as well. It actually was 88. So you are off, sir. But you know what? To avoid skullduggery, I'll give you a chance for a half point as well. You should know this one. Who won the first Royal Rumble?
Well, if I didn't know the year, I don't know if I'm going to know the person, but I'll guess. Oh. Because, see, I want to say Hulk Hogan, but that almost seems too easy. And I don't know if that was when the Ultimate... Yeah, I'm going to go with Hulk Hogan.
Wow. I thought for sure this is common. I was standing feet from this individual. He did not have his iconic 2x4, though, this weekend.
Jim Duggan?
Hacksaw is the first. I was already writing in half point for Tucson. I have to delete that. And I'm stunned you don't know. All the random 80s trivia knowledge that you have for 80s wrestling, Hacksaw winning the first Royal Rumble is kind of low-hanging fruit. I thought everybody knew that one. Wow, yes, I was feet. Uncle Mike, I almost called you and did a video so you could see. I was mere feet from Hacksaw Jim Duggan, from Honky Tonk Man, from the Powers of Pain, from Jake the Snake Roberts. It was pretty cool this week because that was one highlight in a slew of crap. It was the one highlight that we had. I said I should get my phone and try to do a video. I do have some video. I didn't send them to you. But yeah, literally, Honky Tonk Man still looks how you remember. He's got all done up like Elvis still. He's probably in his 80s now. It was something. The Powers of Pain still had the masks going. It was something to see, something to behold, sir. And
that's awesome.
Hacksaw cranking away. Of course, if you want to go up and say hi to any of them, it's like $50 to $100 a pop. but if you're just walking by them, you could do that. That made a otherwise crazy weekend a little bit more manageable. Let's see if these markets are manageable. Spoiler alert, they're not, listeners. It is time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, listeners, let's get to some of the madness. You remember during Vol Views, it was myself, it was Dr. VIX, and it was Scott Nations. And middle of the show, all of a sudden, markets kind of took a turn for the worse. Vol started popping. That was, of course, Trump announcing his effective tariffs, trade wars to the world. and the market didn't like what they heard. And that is continuing today. We're seeing the S&P continuing to give up the juice off almost a full percent, about 0.9%. And let's see, the Dow off about 1/3%, NASDAQ off about 1.3% out there. Let's see our old pal, small caps, they're off about 1.2% as well. So pretty much right across the board, the threats of an escalating trade war with our major trading partners, never a good thing for the markets. VIX cash responding as well at about an 18 3/4 when we kicked off the show. So once again, they're kicking off the week like we did last week. Markets selling off, vol popping yet again, up about 3 1/4 points from where it was this time a week ago. Didn't quite get to the lofty highs. Let's see, how high did we get this morning? 2042. So we got up there, given some of that back, obviously, but still higher than we were this time on the Thursday show. Vol. Let's see, where are we hanging out right now? Vol about a 108. That puts us up about 10 points from where we were this time on the Thursday show. So yeah, it's been another yo-yo market, another yo-yo week here. We're up, we're down, vol's popping, vol's selling off. A lot of interesting things to unpack. I guess I have to start with Andrew. He got the half point today. I thought for sure Tucson would get hacksaw. So the Rock Lobster managing to dig one out. Mr. Rock Lobster, sir, I won't ask you, I won't insult you by asking your enduring memories of the greatest of all wrestling events, the Royal Rumble. Instead, I will ask you, what is catching your eye in very much tariff-driven markets, sir?
I'm gonna have I better win next week is all I can say. With that half point. But at least you gave Tucson a throwaway half pointer.
I gave him two chances. He didn't score any, so that's on him. That's not on you.
All right. I guess I can live with it. I'm glad, I guess, because Hogan, I thought, maybe he's just a 90s wrestler. Maybe the 80s is like Andre the Giant and all those guys.
No, Hogan was the quintessential 80s wrestler.
Oh, okay.
Stop being a victim, Andrew. You knew it the whole time. You probably even knew Hacksaw Jim Duggan, I'm willing to bet. Andrew is a closet 80s pro wrestling fan, folks. Don't let him fool you.
Don't anybody believe this shit. So, hey, but this is a half a point is as close as I've ever been to Tucson, I think, in this competition. Like normally I'm like 2 points down already.
Well, when it started a few weeks ago, you were literally tied. So that's probably the closest you've been. Yes.
I don't know. It's the closest.
Well, what's the score right now? It's 1.5, isn't it, or something?
Yeah,
like
this is.
It is.
I think
it is 1 to a half. Yes.
Andrew can take the lead next week.
When we're both tied. So, so the poor listeners are probably like, okay, well, you just get on with it. All right. So now, if you read the FinTwit over like Friday, Saturday, the Trump tariff thing and all that, I believe like Trump wants to use tariffs to get like political, things he wants done or something that he's not getting done. So I think, so it's happening. So this morning, so tariffs announced this weekend, the markets are like, we're going to be limit down. And I'm like, limit down. That sounded a lot to me. And they were only down like 1.5. And then this morning, I guess Mexico is going to send 10,000 troops to the border. And then we literally bounced. I was trying to get, I must have had, I'm going to say 10 different positions in option pit, trying to close VIX calls, SPY put spreads, puts in other side. It was ridiculous. And some I closed and some I didn't because the market just like bounced like a rubber ball. So, is he trying, or the tariff thing kind of using a way to raise money or some new economic policy? I don't think so. It's more trying to get a domestic policy agenda going. And who knows if it's going to work? Don't know. But the market's bounced a lot, and I think we're still, we got close to all-time highs, SPX again last week on Friday. So, we're 6,000 now. It's 100 points from where we were. We're 130 SPX points, and at an 18.5 vol, that's 1 day, basically. 1 day's move from all-time highs. So, it's certainly something, but I'm going to say like with the VIX curve is kind of flat back to front under the Russell Rhodes 1 point from the front to the back. I throw the 9-day VIX in there. So it is a little backward. It's mostly just, okay, short-term volatility is telling you what traders think. And so it's still pretty bouncy. Would it surprise me if we finished the day only down, 25.25% in SPX? It would not. And we're also waiting for Google and Amazon, which would help you kind of, okay, is that GPU spend there? But is it bad for Amazon or Google if they have to spend less on GPUs? Probably better. So I think at least last week's news was mostly like, is NVIDIA a $4.5 trillion company, or is it going to be a $3 trillion company? And I think that's the biggest, like, how much do you take off the top of NVIDIA? I think that was the story. And to be, I don't know what's fair, what's not. It's back down to 3 trillion. I think it was over 4 trillion at one point. And I guess we'll see what the earnings are and demand. But I think most of last week was just, okay, how much do we take off the earnings multiple on the very top end massive growth stocks? And it looks like, it would not surprise me if NVIDIA kind of hovered around this 110 to 130 range for a while until the earnings came out. And at least now, 18.5 vol, pretty fair. We had a pretty good sell-off from top to bottom. So 6,100 to 5,900. So that's 200 points. It's 3.5% or so. And at this point, most of the earnings were pretty good. And I think we just have to kind of wait and see. And then I think the last thing I will mention is bonds. When we had that December 18 sell-off, when we had that like sharp where the market just like the bottom came out, everybody's worried about interest rate, government spending, all kinds of stuff. And now the Doge team, who knows? And again, it's so hard because you can't believe any news anymore anywhere. But they're trying to cut and figure out where all the federal spending goes, which you would think somebody would know that. But apparently, we're learning where it goes. Right now, the bond market for the last month is just fractionally positive from that melt. So from the beginning of the year, so TLT today actually is just slightly green. So again, it's not normal, but I think if like bonds kind of stabilize, it could lift because interest rates will probably stay around where they are. But if the government can stop spending money, now granted that'll be a hit to the GDP, but I think at this point we will accept that in the short term for stable government. So anyway, those are all the pieces that are moving, and what it does is gives you a higher VIX. It's not a 13 VIX, it's an 18.5 VIX. So even though we're very close to all-time highs, still a lot of noise in the system to make vol higher. And that's my story for today after my big half point.
That's your story, but are you sticking to it is the question.
So far, yes.
So far. The day is young. I feel your pain. I saw that vol collapsing, and I was like, oh, here we go again. In fact, we just talked about this on Vol Views. That's something Scott brought up about how, vol traders are now trained to hit the exit. And we've said it on Vol Views. So, you have to hit the exit so quickly. And then, when you do that, of course, you also risk. It's the one time that we actually go to 60, right? And so that's kind of what we were talking about on Vol Views on Friday. And right now, Vol's continuing to firm up a little bit again. So yeah, you have another chance, I'm guessing, to get rid of some of that upside again if we keep selling off Mr. Rock Lobster. But yes, interesting times out there. Return now to the Uncle-list of Mikes. Mr. Uncle Mike, decidedly not an Uncle Mike type of day. What is catching your eye out there, sir? And how much of a giddy little school child would you have been if you were me this weekend? Just mere feet from Honky Tonk Man and Hacksaw Jim Duggan, sir.
I mean, in terms of the giddy schoolgirl feel, I don't even know. I mean, it's funny. Even though football is my love and sport or whatever, when I look back at my heroes from growing up, there's a lot more pro wrestlers as my heroes than there are football players. So don't get me wrong. I have a lot of hero football players too, but yeah, it was, I couldn't even imagine such an opportunity.
I almost walked up and shelled out. I don't like paying for autograph. I think that's ridiculous, but I almost walked out and shelled out for the two of them just to do a combo photo, just to send it to you, Uncle Mike, and to say, Nana, Nana, Boo Boo, wish you were here.
That would be cool. That would be cool. But yeah, and, in terms of these markets, it kind of is an Uncle Mike type of day from the standpoint that with all the stuff going on, we're not even down 1%. We were down at 59.23. Buyers come in. We've literally rallied 70 points in the last couple hours in the S&P 500. And granted, we were down a lot lower, but the point is that buyers come in. And so long as buyers keep coming in, then the market's going to keep coming up. And as of now, buyers continue to keep coming in. And the other thing of note that I'm seeing on here is the 6,000 mark. We, over the course of the last 3 months, or since early November anyway, 6,000's kind of become the magnet of the market. We get a little bit away from 6,000 and then it sucks it back, whether to the upside or the downside. 6,000's about the valuation of this market of where it wants to be at this stage. I think it's exciting that bonds are actually up a little bit. What good it does the economy, who knows? But still, it's exciting. Bonds are actually up. That's kind of a fun thing. But that's a good thing. And then in terms of this market, of what's driving it, what's happening to it, it's very difficult to have an up day in the stock market when Apple is down $9.25 on the day. When that's the case and Apple's down nearly 4%, it is difficult to have a bull market. So we do have that working against us. Now, a couple other things that are working in our favor, just looking at like a JP Morgan in the banking sector, that's roughly flat on the day. There are other stocks that are doing well. Waste management, that's up almost $4 on the day. Of course, we have AbbVie up nearly $6 on the day. So there are stocks that are higher, but unfortunately, there's more stocks that are lower than there are higher. The lower ones, of course, being Tesla down roughly 6%, NVIDIA down 3.5%. So this isn't like it's all the stocks are down the same type of market where every stock is down about 1%, and that's what's driving it. It's you have some that are really up and some that are really down. So there is a lot of shifting happening, and the market's trying to decide what way it's going to go going forward. And fascinating as it is, it's still a down day, but could be a lot worse. And that's my story, and I will stick to it.
Could be worse. Could be an up day. Badoosh doosh. There you go. Rim shot. Just for that. Just slamming the bulls. Just for fun. Why not? Because you're in your little cabal of bulls on Facebook, Uncle Mike, just driving this market up endlessly. You know, got to take a breather every now and then. Let's see if the options market and the big indices are taking a breather out there or not today, listeners. And the answer is really kind of no. It's a pretty hot day out of the gate, even in some names that have been a little bit sleepy. Well, VIX wasn't that sleepy last week, but prior to that, it was having a hard time getting out of bed in the morning. VIX looking decidedly more robust today. 684,000 contracts on the tape. The big dog right now, listeners, 52,000 of the 16 puts in February, followed by 42,000 of the 15 puts in March. So puts dominating the tape out there today. Also, Mr. Rock Lobster, we spotted this. Kind of fascinating. We don't see a ton of these out there, which kind of caught our attention. An iron condor went up today in VIX 10,000 times. Looks like it's the 14, 16, 17, 19 iron condor. Again, 10,000 times, listeners, expiring on February 19th. Looks like they did it for about $1, somewhere in that ballpark. Mr. Rock Lobster, February 19th now, 14, 16, 17, 19 iron fly for about $1. Does that blow your skirt up, sir? Get you excited?
So you think they sold that thing, huh?
I think they bought it.
Okay, hold on here. Oh, you mean like, so they bought the middle parts?
Yeah, they bought the guts.
The gutty parts? Let's see here. I guess this is a Henry special. So they paid $1 for that thing?
Approximately 96 cents, looks like.
Yeah, that's an oddball one. I guess, we close under 14 or above. So that's, I don't know. I guess it's not terrible. Like, I guess you sell the 14 puts for 4 cents.
That's the winner of them all.
I mean, maybe they were just looking for that extra 4 cents, so they're spending less than $1 on it. To me, that feels like a slightly. That trade slaps me with the shovel of ambivalence. To be honest, I could see us closing like a 15 or lower. It's possible for VIX, but man, every time it touches the 15 handle, like 15 is the new 12. It feels like. So yeah, like we said, Trump, we never thought single digit president, but he's coming out of the gate. It's kind of similar to how he came out of the gate the last time, I have to be honest. Single digit president didn't really come until he was in office for about 8 or 9 months. At least right now. That is an ambivalent trait, but it's almost like, man, that's a lot of contracts, 40,000 contracts. Just like it's a love your broker trade, it almost feels like.
Yeah, I don't love it. You're right. It's kind of wide. That's why we don't see these too often. I know you like yourself a good strangle, but the iron condor. What if Don Schlesinger was here? He would definitely say that was an iron fly for cowards right now on that. A little wide on that. I don't love it. You're right either. Before $1, I don't think I'd love selling it either. We're asking, actually, we just put that up as a flash poll for our audience right now. And they're all sorts of split. Roughly a third want to buy it. Roughly a third want to sell it. Roughly a third are saying, what the hell is an iron condor? You wiseacres out there. So that'll be a flash poll. That'll be live throughout the rest of the day, listeners. So you folks listening on demand today. If you're listening down the road, you're out of luck. But if you're listening on demand today, you too can play along with the madness that is our flash poll as well as our question of the week. I'll get to our question of the week in a little bit, but that one just struck me as odd. We don't see size iron condors going up that often in VIX, so when it happens, it's worthy of note. Let's see, SPY. Is SPY hot out of the gate today? The answer is yes, 6.7 million. For frame of reference, listeners are usually expect around 4.25 or so, so you're talking nearly 2.5 million contracts above where we typically expect at this time of day. The ADV is about 8.8, and we're probably going to get there by the end of the show. The S, nearly 2.5 million. It's almost exactly a million. Actually, technically, it's 2.45, so it's exactly a million away from its ADV of 3.45 right now. So, man, the S on fire. About 750,000 more than we expect this time of day. Small caps already at their ADV. 1.5 million. Their ADV is 1.46. So small caps lighting the world on fire, and not to be outdone, the Qs, 3.33 million contracts already. The ADV about 4.33. So they're probably gonna hit that by the end of the show as well. So just a hot day out there in the indexes. Now the question then becomes, is it also a hot day in the single names? And the answer, sometimes in these hot macro days, the answer is kind of no, and that's kind of the case right now. I mean, 268 on the tape, that's not anything to sneeze at. It's not, $1.50 dog days of summer type numbers, but it's also not 350, it's not 450, 460 like we've seen not that long ago. So 268, it's respectable, I'll say. That gets us to SoFi, about 15.5 off about 30 cents today, or about 2% for them. Coming in at number 10. Number 9, we've got Microsoft, 412.70 or so off about 240, or a little over 0.5% for Softy. All this debate. What does DeepSeek really mean? Do these numbers out of China, can they be believed? This $6 million number, is that just a lot of nonsense? Seems like most folks think the answer is yes on that one. So yeah, a lot to be debated there. Folks are certainly doing that. I think we've said on this network, long term, if those numbers are even close to right, that is a good thing in the long term. Maybe not a good thing immediately for NVIDIA and other names, but in the long term for society, making these things cheaper, more efficient, probably a good thing. So a lot of debate going on there, weighing on some of these names like number 8, AMD, 304,000 contracts, 113 and 3/4 off, about 2.25%, about 2% for AMD as well. Number 8, number 7, out to China. It's Baba, $99, pretty much even, up about 1/4 today. So not a huge rock'em sock'em day for, at least not right now for Baba. On the day though, they've had about almost a 6-point range. They hit about 96 to the downside and 101.87 to the upside. So they were moving around quite a bit, kind of hovering around unched right now. Number 6, Intel. This one's kind of been interesting of late. 312 on the tape for number 6, 1945. Kind of unched today. Has had a range of almost exactly $1, 1878 to the downside, 1975 to the upside, hanging out 1946 right now. Again, kind of unched for number 6, 312,000 contracts. Number 5, it's Meta. You know, after that DeepSeek number came out, they're just all in now on AI, going to spend tens upon tens of billions of dollars on AI. So the cheaper, more efficient AI, the hell with that. We're going to spend like there's no tomorrow. And the market likes it. 701 and about 0.5, up about 12.25, about 1.75%. Meta, number 5, 392,000 contracts. Number 4, Palantir, 83.10 or so, up about 60 cents. This is the name that is all over the place. They are popping off after the bell today, and just another kind of bellwether for what's going on in AI. I mean, by any stretch of the imagination, this stock is redonkulously overvalued, 420 PE. But then again, in the world of AI, once you whisper those 2 magic letters of AI, it kind of kicks to the curb. Old letters like PE. Nobody cares about that anymore. So Palantir can continue to rally, even though we have seen a lot of analysts, as you know, the dim view that I take of analysts, listen, a lot of them have, I think, retraced their targets out there. Most of them are much lower than where they are right now. So Palantir in some lofty land out here for valuation. Can they maintain it? I guess we'll find out after the bell. But looking pretty frothy out there. After dipping back into the 60s not too long ago, I think they got down to about 68. They got down to, actually, I take that back, 64.98. So they've rallied almost $20 from there. So quite the run for Palantir of late. Is this sustainable? I guess maybe we'll find out after the bell. Number 3, it's the fruit company. Selling off today, finally. 226.87 off 913 and nearly 4%. You know, they can't sell iPhones. All their core businesses kind of suck. But, you know, they can make some money on services and other things. So Apple's been good at the earnings shell game for a long time, and they continue to do it, and it continues to work. Maybe today, finally, catching up with them a little bit out there. It's kind of like Tesla. They can't make money at their core business, but man, that Bitcoin's looking good. And those credits, don't get me started on those carbon credits. They're making money hand over fist on those. But they can't make money at their core business. But we'll see. Apple's got the cash in the tank to maybe weather the storm. Apple, number 3, 909,000 contracts. Number 2, the aforementioned Tesla. They're coming for it today, 380.40, off about 24.15 or nearly 6%. So back below the 400 level. We got here last week. Before then, it's been a while. Since like January 7th, we really got back below 400. And before then, you got to go all the way back to, you know, early December, actually. So it's been a little while since we've been here. Tesla, number 2, 1.51 million. And number 1, the one everyone's got their eyes on. What does this DeepSeek, what does this mean for the bellwether of the AI boom? It is NVIDIA, 3.18 million. 116 or so right now, off about $4 or 3.25%. Continuing a, let's just say, not great month for NVIDIA. They were nearly 150 on January 6th and has just done naught but sell off. In fact, they were 147 again on January 23rd, so even more recent than that. And then, obviously, we all know what happened since then, and it has just fallen off a cliff. It's off about 20% over the course of the past month. If you go from the 23rd, it's off even more, probably about 23, 24%. So Been a bit of a bloodletting out there in NVIDIA. Like we say, now you compare PEs. NVIDIA seems lofty at a 45, but we were just talking about Palantir, almost 10x that. So PE in the world of AI, very much a subjective thing. Yeah, Palantir 420 versus 45 for NVIDIA. So NVIDIA today, number one, 3.18 million. We've got hot earnings this week as well, listeners. Obviously today, Palantir. Tomorrow, Spotify, Pfizer, PepsiCo. Used to be down the street as well. I think they have moved as well. Alphabet, Chipotle, Snap, and EA on the gaming front. Wednesday, we got Uber and the Diz and Toyota and Brian Overby's beloved Ford and Qualcomm. Thursday, we got Roblox, Peloton. Remember them? And Amazon. And Friday, some name I've never heard of. Cibo? I'm not sure how you pronounce that. I think it's Belgian. But either way, let's keep on rolling, listeners. Let's go to the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, everybody. Like we said, not the most rock'em sock'em day on the single name front, which is the perfect time to continue our look back, our stroll down memory lane through the wild trades of 2024. What stood out on the odd block? What were some trends and trades that really resonate to us? I remember this one, listen, this one popped up on our radar many times last year. Two different trends at different times of the year, which is kind of interesting. This is everyone's favorite SoundHound AI, ticker symbol SOUN, SOUN. Trading about 14 and a third, up about 22 cents or 1.5%. Let's see. So far for the year, though, they're off about 28% just year to date. And of course, you go back a year, a full calendar year, and they've had quite the run. 12 and 3/4 or 781%. Wild times for them. They first kind of came on our radar. We talked about them before, but for last year, the first time they came on our radar was back in February of last year, February 12th to be precise. So coming up on a year ago. We talked about with the stock, 229. Oh, what a distant memory that seems, 229 in the stock. But the stock, 229. We talked about somebody scooping up some puts. It was a veritable put palooza, which again, very different theme from later on in the year. The stock was 229 and somebody could not get enough of the March 2 puts. They started scooping them. They were 15 at 25. They traded 20 cents first. They bought 5,000 for 23 and the balance at 25 cents. So they bid them all the way up from 20 to 25. They did a total of about almost 10,000, 9,500. So it was a pretty aggressive put buy. There were earnings in this. This was an earnings hedge as well. The earnings were on March 5th. March 5th. Easy for me to say today. Again, rough weekend out there, listeners. But yes, so a lot of people loading up on puts, which is kind of fascinating. Let's go back the full year to March. Let's see how they did. Earnings are on March 5th. And the stock closed at about almost $5, $4.96. Well, that was where the stock was on March 5th. The stock ended up closing later at nearly $8. So those puts not necessary. Now, they paid about exactly 10% almost of the value of the stock, but I don't think they were sweating it because obviously they probably held some stock. So they were not too mad at giving up 23 cents roughly when the stock rallies to $8. And then we all know what SoundHound did. It came back on our radar again later in the year, in particular, October 14th. This was a trade that resonated to me on the show. I know at the time I worked a bid for these. I missed it, I believe. I know a lot of our listeners ended up scooping these, and it worked out for a lot of you. This was now flipping the script entirely. Folks loving themselves some SoundHound AI. And the stock at the time was $532. We talked about somebody coming in and just gobbling up 23,311 of the Nove 5 halves. This was October 14th. So they had over a month. So a decent little duration for these types of trades that we see. Now, they were paying quite a bit. They're not quite 10% of the value of the stock, but pretty close. But nonetheless, let's see, there were earnings on November 7th. So they got that earnings catalyst thrown in there as well. And we talked about it at the time saying, you know what, it might seem rich, but given the history of this name, it doesn't seem terrible. The stock had retreated from 8 and change down to 5 and change. So if it was poised to make a move, this didn't seem like the most expensive way to do it. A lot of you wrote in and said you got filled later and after the show or the days later. good to all of you out there. The stock ended up closing at $6.36 on expiration. So you're talking a pretty good winner. Not quite a dollar, but pretty darn close. Obviously, if you got out earlier, you did even better. The paper, these were still open, weirdly enough, at expiration, but they more than doubled their money. So they were pretty happy. A lot of people wrote in. Let's see. This person said they bought them at 42 cents, this listener, Matt 2.0. And then he bought more a week later. He got in more. He liked them so much, he bought them when they came back in for 26 cents. So that was a double good do, as the kids say. So this one was a winner across the board. Mr. Rock Lobster, do you recall SoundHound AI being on our radar quite a bit last year? And also very much the tale of two tapes. Folks fading the hell out of it in February and then buying all the upside in October, sir.
Well, that's kind of I feel like that is the way of AI. Everybody like, no, because these are all like kind of these aren't the companies making the big dough in the AI. These are the peripheral companies. So, yeah, but now they're actually the stock's up there. And it's been a while on this one, but we saw a lot of those where you just put AI in the name. It's SoundHound AI. And then you get the Instapop on it.
Yeah, we laughed at the name at first when we first saw it. We said, SoundHound
Yes.
AI. It seems like a desperate way to try to squeeze AI into the name. But hey, who are we to judge because it worked from a price perspective? We got time for one more here. Let's go to another name that very much dominated our tape last year and kind of throughout the year as well, even though the second half of the year it really picked up steam. This is TIGR, listeners. You remember this one. Up FinTech Holding Limited, ticker symbol TIGR, TIGR, ADR, out of China, trading $6.64 right now. But a year ago, we started talking about it on the March 14th show. Actually, the Flowmaster brought it up. He talked about with the stock at $4.92, so about $1.70 below where it is right now. Paper was coming in, loading up on the July 7th. Again, this is March 14th. So longer term stuff. They were buying the July 7th. Again, I don't care how long you're going from nearly sub $5 to $7. A big move in that stock. And they were paying 23 cents for the privilege. That was about a 65 vol. They bought them blocks of 3,300, 2,900, 2,500, 2,200, 2,000. They bought well over 10,000 on the. Actually, it looks like they bought over 30,000 on the day. So that was back on March 14th. The Flowmaster highlighting those July 7th. Those I do believe. Let's look here. Those looks like did not work out because the stock went out on July expiration, right around a little bit shy of $5. So not that far from where it was back in March. A little bit shy of $5, about $4.61. That was the Flowmaster profiling that. It came back on our radar. Our Eye of Sauron spotted it again in September, listeners, where we talked about just a wild call palooza going up. It was the Jan 6s. This is September 30th, listeners. Stock was $5.81. It was a new 52-week high for the stock at the time. And somebody said, hey, Jan 6s, how are they? They got 90 cents at $1. So they weren't playing around. They knew which way this customer wanted to go. They weren't selling. And so they said, we'll pay $1. 4,970 times. They came back and did a total of 12,000 on the day. They liked it so much. This is another one. They got earnings. They got earnings on November 25th. So maybe that make you like them a little more. We also talked about the same day, 3,809 of the October 8s. They weren't even going out to Jan this time. They said October 8s, 15 cents for those bad boys with the stock around $6, a little bit below it, $5.9. That one seemed like a bit of a bridge too far. And then we talked about it. That wasn't crazy enough for you. We came back not even a week later, 5 days later, October 3rd. So the very next show, and said that Jan 12s, those were lighting it up now. 4,021 times for $1.85, lifting the offer again. The stock had skyrocketed since then to 876. So the stock had a nice move. Those Jan 6s paid off. And even the Oc 8s, they did all right. And then we said if the Jan 12s weren't enough for you, someone on that same show bought 1,113 of the Oc 17 calls. 17 for 30 cents. That was a 250 vol, if you are wondering, listeners. And then you know what? That we weren't done with TIGR even then. We came back next week, October 7th, and said, you know what? We have a new trade of the year contender. somebody could not get enough of Tiger. They came in and scooped 2,095 of the October 25s. Now you can see how maybe the animal spirit had possessed them, because the stock had soared from when we first started talking about it on September 30th, 581. It was 1273 on the October 7th show. So a week later, the stock had more than doubled. So they were just feeling it. Said it's going to do that again. It's going to more than double again by October expiration. I will pay 35 cents for the OC 25s. I mean, that seemed like a bit of a bridge too far. And it was. The stock topped out on October 4th. This person almost bought the high. Actually, they paid $12.73. That might have been the actual high, because it closed at $12.39 that day, and they kind of never really looked back to that level again. The stock closed on expiration in October, $7.22. All of these 25s were still open. They sucked from the jump, and they never looked good. They dropped 73 grand. This was up there, Mr. Rock Lobster, for one of my trade of the year contenders for just sheer ridiculous. It kind of got outweighed by, let's say, some of the NVIDIA nonsense, the 1700s, stuff like that. But this was certainly up there in terms of just sheer irrational exuberance. Mr. Rock Lobster, do you recall TIGR lighting up our tape last year in the odd block multiple times, and anything stand out to you, sir?
Yeah, I had to look back at this one, because I'm like, because it had that crazy spike in the fall. And then it just brought in all the paper. And again, I think some of these Chinese equities I've seen, they tend to have some pretty interesting speculative call buying sometimes. And in this particular one, I remember this one, we're like, because I think we were laughing at this one, like, you're buying the 25s for 35 cents. And it's because the stock had had that squeeze to 14 or 15 bucks. So, and I think it was, and that squeeze was on, didn't one of the big hedge funds say all in on Chinese stocks or something this fall. And we had that pop, and then ever since then, they've all gone back to just not being great anymore. So anyway, I do recall this, but this particular call was because it was like $15 out of the money, or I don't know, like 300% out of the money. It was impressive. Impressive for not being good.
Impressive indeed. You know what's always impressive? It's the strategy block, so let's get to it.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, Mr. Uncle Mike, for the next 10 minutes, the folks want to hear you do naught but your best hacksaw ho impression. Go.
Ho! Tough guy.
Not bad. I'll give you like a 7.5 or 8.
Not bad. All right. I have much respect for Hacksaw Jim Duggan, his patriotism, and everything he did for the great sport of professional wrestling. But with that, what I want to talk to you about today is what I really think is a trade it's a trade that I'm putting a lot of clients in this year that I think is pretty important for the market with which we're in, and that's the collar. There's a lot of stocks that have increased in value right now, just due to the bull market, of course, and I'm hesitant to want to sell this market. Let's be honest, I don't want to sell anything, but I'm also very cautious this year just because of the fact that we've had 2 very dramatically up years, and we could be in for some type of craziness this first year of the new presidential administration. With that, the answer to that concern is a collar, in my opinion. And what's unique about collars right now then that we've just not had in the 20 years that I've been in this business up till a couple of years ago before we had interest rates, you really couldn't do a lot of these things as well in collars. And what that is that when you do have interest rates, when ROE actually exists, calls are theoretically priced greater than puts. And so what that means is that you can actually buy a put, and this isn't in existence in every stock, of course, but you can actually buy a put closer to the current price of the underlying than you can sell a call a lot of times. So in other words, my point is that with calls priced more, I'm sorry, I meant to buy a call. That's what I meant to say. With calls priced greater than puts, collars can be more favorable now. So for example, one of the things with which I'm looking at, let's just bring up NVIDIA. With NVIDIA, if you were to go roughly 2 years out, let's go to January of 2027. And I'm not in this position, but I'm just kind of using this as an example. NVIDIA is trading at 116.80 right now. And if we were to buy the 115 put, it would cost us $27. Now, that's a lot of money, of course. And by doing that, yes, you pay the premium, and you still do have roughly $1.70 of risk. However, if you simultaneously go out to the 150 level, let's say, you can sell a covered call for $27.25, and that mitigates the cost of the 115 put. Now, by doing something like that, you actually have then $1.70 of potential downside risk, so about 1.5% approximately, but your upside, you actually have $32 of potential upside, because if NVIDIA were to go from where it is right now to the 150 level, then you would actually be able to capitalize on all of that. And so what that actually gives you is the ability to have a essentially zero risk or a very minimal risk trade, but a lot of potential upside. Now, granted, this is over the course of 2 years, so you'll have to hold this. But what I think is really important right now is if you're unsure about bonds, if you think that we're going to have some more inflation, or you just don't want to settle for 4 or 5% over the course of 2 years, things like this are areas with which you can look at as a potential alternative in the safer section of your portfolio. And yes, I said it, safer and NVIDIA all in the same breath, but it's because of options that such a thing is possible. And this is something that I would encourage you not to do per se, but to consider if you're looking for an alternative on the safe side of your portfolio. And that's my strategy for today.
All right, listeners, now it's time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, welcome to the Around the Block segment where we tell you what we're keeping an eye on till the next episode on Thursday. And as we're coming into the tail end of the show, it seems like some of the sell-off is mitigating a little bit. I say a little bit. The S&P back north of 6,008, off about 32 handles, or a little over half, about 0.55%. The Dow still off about 0.1%, but threatening maybe to go green, or at least on NASDAQ off 0.9%, and VIX cash hanging out at about 18.25. Actually, looks like it might be dipping below the 18 handle by the time we wrap up the show here. So looks like maybe, again, it's hard to read into any of these moves. So we saw a head fake earlier this morning as well. Is this the worm turning or just another pause before we take another leg down? You know, we've seen these markets whipsaw all over the place. We could easily end green on all of this stuff by the end of the day. So intriguing stuff out there. Speaking of intriguing stuff, we have a couple of intriguing, well, we have a question of the week and a flash poll right now. Right now, you folks, 40% of you want to sell that iron condor in VIX for roughly $1. 30% say you want to buy it. 20% say you're not interested. And 10% say, what's an iron condor? So you goofballs out there. And then right now, our actual question of the week has to do with all these winds of change that are buffeting the market right now, which is quite simply tariffs. And the threats of escalating trade wars are roiling the markets today. Is this a tempest in a teapot, or do you think we'll be dealing with the fallout for some time to come? Quite simply, how long do you foresee these tariffs impacting the market and volatility? He gave you 4 choices. It's a tempest in a teapot, so it'll be over before you know it. Or maybe shorter term impact, let's say through Q1, or a little bit midterm, let's say Q through Q2, or you think it's going to go through Q3 and beyond, maybe even into next year. Mr. Rock Lobster, we'll start with you. What is your thought on the impact of these tariffs? Is this a tempest in a teapot, or are we going to be dealing with this for a while? And then B, what do you think our audience is voting for? And C, what are you keeping an eye on for the rest of the week? Mr. Rock Lobster. That would be you, sir.
Oh, I just have to a mute button first time in 2025 already. 10% of teapot. Because we saw this before. My gosh, all this Trump volatility. It was so amazing to trade for 4 years. And I think the audience is going to see it for what it is, a little tempest in a teapot. So what am I looking for this week? I'm looking for some Amazon and Google, which to be honest, we'll see how big they are, because Facebook was printing it on advertising, and let's see if Amazon and Google do as well. That's a sign of health. And, and see if we can get over the 6,000 mark. We're trying, and kind of get past this tariff thing. But, I mean, every time you blink, we're back to 6,000 again. So let's see if we can lift off and away for the rest of the week.
And if folks want to lift off with the land of the pit, where should they go? What should they do?
Yes. 888-TRADE-01. I run 5 or 6 products, although 2 are closed now because the trades are all live. But if you want to learn how to trade this vol stuff, and also kudos to Mike for the collar with the high interest rates. One of the very best uses of Row that I can think of for the retail trader. Get that nice juicy call for the collar. So anyway, that's an excellent tip for anybody that wants to protect their equity value and have something handy to close if the market sells off. And with that, I will see you next week or maybe Friday.
All right, everybody. Mr. Uncle Mike, sir, after all that praise, what is your vote for this tariff impact? Tempest in the teapot, or through short-term Q1, Q2, or Q3 and beyond? Which way do you think our audience is going? And what else are you keeping an eye on for the rest of the week?
Well, thank you for the kind words, Andrew. It means a lot coming from the source of someone. There's few people on planet Earth who know more about the option product than you. And I'm willing to bet there's no one on planet Earth that knows more about options, but yet less about pro wrestling than you. I think you earned that title. You are that intelligent with options and ignorant with pro wrestling.
He's on the tips of both spectrums, yes.
Yeah, he is that good and that bad on both of those things. So with that being said, I think that this is just the beginning in terms of the tariff talk. This was such a thing back in the first administration. Oh, we're going to have tariffs. Market goes down. Maybe not yet. Market goes up. And so I think we're going to have a lot of that, quite honestly. And I think the audience agrees with me. With that, going into next show, continuing to watch the 6,000 potential magnet in the S&P. If you want to learn more about Uncle Mike, go to stcharleswealth.com. If you are looking for a financial advisor who will do this stuff, stcharleswealth.com.
He ain't afraid of no ghost or options. Check him out over there, stcharleswealth.com. You folks can't make up your mind right now on these tariffs either. Roughly 28% each are saying it's just a tempest in a teapot. It's going to go through Q1. It's going to go through Q2. I guess the good news is only 14% say it's going to go through Q3 and beyond. That just went live. At Options is the place to go to make your voice heard. That is going to do it for us today on the network. Obviously, a lot of things going on outside the network, but we'll be back later on this week with boot camp and all your other fun, and back again on Thursday. Another episode of the Option Block. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.